Thank you everybody for attending today and welcome to our second audit and risk meeting for this term of council. Do we have any apologies? No. Do we have any extraordinary business? No. And any declarations of interest? No declarations of interest. Great. So we'll just move on now to confirmation of the minutes from the 19th of November. If we just go through page by page, page 3 and page 4. Do we have a mover that these are a true and accurate record? Thanks, Russell. And Jeanette, thank you. Now we'll move on to item 5 on the agenda, the ACL Esprit Contracting Limited draft statement of expectations. Who's going to talk to this, Helen?
Thank you, Madam Chair. This report was requested by Council last year. I'm not aware that it's something that has been prepared for ACL before, but a statement of expectations is forwarded to them for them to reply with their statement of intent. In this regard, they would normally be required to send through their statement of intent through to us 3 months prior to the end of the financial year, or the start of the following financial year for them. So they have come back to us knowing that this is underway, requesting just a slight extension through to the 9th of March to be able to incorporate the feedback that they received from the statement of expectations into the draft statement of intent that they will then send through to us.
Thank you, Helen. Do we have any questions with regards to the statement of intent? The draft statement is on page 10 in Stella. Expectations, beg your pardon, on page 10 in Stella. I have a few. I can kick off. 5.4, environmental and sustainability KPIs, carbon emissions reduction, implement ESG. Is that emissions something management or?
Environmental, social and governance from memory.
And then we go on and reduce emissions year on year. I mean, how long is that possible, and is that cost effective, and is it reasonable to, once they get to an optimum low level, to continue to reduce the emissions? Is that standard in these statement of intents?
Reasonably standard nowadays. We can perhaps look for some feedback from ACL if they have concerns in that regard.
Okay, thank you. And I have another comment. Has anybody else got their light on? No. Oh, Tony, you go next.
That's okay.
I
don't mind. I just have one comment. It's under 5.5, diversity and inclusion, which is all fine and good, but I always believe that the first priority should be employing the best qualified person for a job rather than the diversity. So I'll just make that comment. That's what I believe.
Does anybody have a view on Tony's comment? They'd like to add anything to that? Do you want to see the document changed as a result of that comment or reviewed?
Just a comment from me. I think that could come back as feedback from ACL as well.
We'll highlight that to ACL. So if we move on to paragraph 6, dividend policy and capital investment expectations, which I'm sure we've all read, and we all look forward to the declaration of the dividend. What do you have a view on how that would be managed in our statement of intent? Any questions surrounding that? Richard?
Yeah, it's become abundantly clear when we've been going through our annual plan this year that the council has investments and needs a return on those investments to put in to help, not subsidise, but to help offset our rates. And it goes into offsetting the UAGC and the general rate, which is spread evenly across all our community. And so it's important that we do actually manage our investments to, one, give us a dollar rate of return so we can use that money, the cash, but also act as an investment. And so this part here should reflect that we actually get a dollar return in cash, which we can use to spend on doing that, but also it's a good investment.
Anybody else got a comment on that? I would concur. Are you pushing your light on, Murray?
I was just going to say, when you say a dollar amount, what do you mean by that, Councillor? I was just thinking, were you actually meaning a dollar number rather than a percentage? Because that's different.
Yeah, I thought about a percentage, but if the council, if we can't get cash, actually dollars out of the organisation, the question would occur in the future. Why does the council own it? Because that's the, when we've got big costs, so we're borrowing lots of money. So our cost of funds, I think it was announced at 3.8% the other day. So really, if we can't get 3.8% back, and we're paying it an interest, there either has to be some capital growth or that sort of thing. But for a council that's, with councils under the pump as it was financially, we need to be getting some cash back, and that will actually makes it justifiable for us to own it. Because you'd hope that they can do that and make a return on top.
So I'm just thinking from the company's perspective, if we're putting a dollar, we're talking about putting a dollar number there, what if they don't make that amount of profit that year?
In the current dividend policy, it says dividends should be should be declared annually, subject to profitability and liquidity. So if this is motion, if Richard is of a mind to make a motion, is passed, then I think there would be a negotiation. If they weren't able to do that, then there would be. It's that caveat is in the policy.
Madam Chair. I think there's also a danger in this though, because the ACL are going to fight for that figure if you put a dollar value in to be conservative so that they can meet it. Then they have a very good year. We're actually penalising ourselves because you're only going to get what you've asked them to return as well. And we know they're looking at other opportunities and expanding and all those sorts of things. Where I have a problem with the percentage is, getting near the end of the financial year, there's a nice profit, so they go out and replace some trucks and put solar panels on the roof, which comes out first before they then pay our dividend, and then our dividend drops. But yes, they've increased the value of their asset because they've got some new things in there, but that's hard for our ratepayers to quantify in that respect. So there's got to be a balance somewhere.
There has to be a balance.
Yeah.
Hamish?
Yes, the balance is the key, clearly. Just remembering the directors of ACL are charged under company law with the best interests of the company. So they must do things that are, in their view, in the best interests of the company. The statement of expectations is just trying to set out in as clear a way as possible what council as the shareholder expects from them. But in the end, they can't pay money they haven't earned. Otherwise, they're in breach of other responsibilities enshrined in law. So this is expectations. It's an important signal from the shareholder to the company, but this isn't a legally binding obligation on the directors to deliver if the company performance doesn't support it. Yeah.
We understand that, and that's what it would say. To test the room, I'd like to make a suggestion that it's, given the cost of finance is 3.8, is that correct, Helen, at the moment?
That was a few months ago. It has since come down to 3.35, but it's projected to go back up over to about 4.2 over the next 12 months.
I'd like to test the room that we request a 4% return on equity from ACL in terms of our dividend going forward. Do I have a seconder?
Could we just clarify?
Yeah.
I was just sorry. So when you're saying 4% return on equity, are you talking about the return on equity within ACL or the investment that the council's made? Because I think, to Hamish's point, that the directors of the contracting company, slightly conflicted here because I am a director of a contracting company in another jurisdiction, are charged with the capital maintenance, the growth and the profitability of the contracting company, and they will do their absolute best, hopefully, to increase that number over time, including return on capital employed and all the rest of it, which will be an internal to the contracting company percentage. what I've seen normally expressed in terms of an expectation is a percentage of net profit after tax. Because that could be, if they make 10 million, it's 5, if it's 50%, if they make 2 million, it's 1. But we don't know what the trading conditions are going to be, and we can't say it needs to be 5 million or 1 million, because we've got no control over that from year to year. So I think we need to have a conversation within that sort of framework, if that makes sense.
And I think that is suggested in the document. But to Russell's point, Murray, and I think that that's fine. I think to Russell's point, it's after tax, the 40 to 60% is proposed in the statement of expectation, but that may come after other costs or other things. Like, we own ACL, we really have no control over what is purchased pre-tax, So that's where there are views, I suppose, isn't it? I think that was to Russell's point, it's a balance. But if we don't have a seconder, that motion fails. So does anybody else have another suggestion? Murray, you should. Yeah.
So I just, in terms of the view on that, I mean, you would hope that we're appointing directors to that company who are going to make those decisions around replacing capital and CapEx versus OpEx in the contracting company to make good decisions that think about the whole of life of the asset base in that company, to get to what over time is a sustainable net profit after tax number. So, I think it's a balanced conversation around that. We're not, otherwise the other side of it is we could have them behaving in a way, we've got to make X amount of dividend and not doing the right replacement, and therefore we've got old assets not producing the right number. So there's a balancing act.
There's a balance there, and I think we all acknowledge there's a balance. But we also need to acknowledge that we represent the community and we own the business, and we have an expectation as well with regards to that. So are people happy with that? Anybody have any other comments? 40 to 60% is in the thing. Richard?
How do we, because this will be used when we look to appoint directors in the company, because that's the only time we get to change things. We either hire or fire the directors, so that's really our point, and when we hire a director, we want to ensure that the director understands the drivers the council has. Because a director could come thinking, yes, they want to grow this business. If they don't get any cash, that doesn't matter, they're going to grow it into a massive company. Well, I think from our annual plan conversation yesterday, that's only good if we're going to sell it. Well, but if we get the cash in, that's actually a good outcome in the short to medium term. So I just want to make sure that thought is driven in the proposal. And is that strong enough, saying 40% of net profit after tax? Because it's not profit is not the main motivator there, is it? I don't know.
Has anybody had some thoughts around that? Hamish, beg your pardon.
Yes, I mean, the idea of the balance between profitability and liquidity is, I guess, to balance the situation where they've made a profit, had other matters to attend to, and don't have the cash, and so they borrow to pay a dividend. And that's not a sustainable position either. So that's why it refers to liquidity. I was just doing a quick calculation. The earlier resolution, which I know has lapsed, but there's a roundabout in their balance sheet, 25 million in equity, so 4% is $1 million. So that was the sort of scale of suggestion in the previous suggestion. I don't have their P&L open in front of me, but if you think about a target payout of between 40 and 60% of net profit after tax, we might look that number up for you and give an indication of the level of that. So while it might not be stated as a number to Mr. Harrington's point, we can perhaps give an indication of the sort of numbers that might flow through to council based on the way in which the SOE is currently. So just let us do that little quick calculation.
Are you doing that now, Hamish? Yeah, okay. Whilst you're looking that up, if we go, I just have another question with regards to the innovation and resilience aspect. it is very important, but is this loading up the costs for the business? I mean, I think it's standard, but I suppose it depends on the extent of point 8.
Just coming back to Richard's comments around directors, when the company comes to hire directors, the information they put out around for ACL, put around it, frames the type of director they want, and they inform them of the decisions or the way that the business is run, and they're hired that way.
Thank you. Look, the innovation and resilience, I think you'd be expecting that of the board for them to do that. So I think it should be in there. It's,
Yeah, I agree. I just put it up for conversation. Okay, how are we getting on, Hamish?
Yes. A portion of net profit after tax is only relevant if of course they make the profit. So in the case where they have a really difficult year, they will declare 0 dividend, which hasn't been their habit.
No.
So even where they had a difficult year, they have acknowledged the needs of the shareholder and have paid a dividend, despite that declared result. So again, I think we just need to describe in a better way, because as it is, you're expecting nothing from them if they don't make a profit.
That's right.
But we've been receiving support from them that we would be saying don't bother, which I don't know is actually our intention.
No.
So somewhere between what's in here and back to the issue of a portion of equity is a more perhaps more acceptable language from council as the shareholders' point of view.
And given we have the caveats around regarding it, like we are not, as you say, Hamish, as you said earlier, it's sort of an expectation. It's not a mandated thing. It's open for discussion and negotiation. And with the current directors there, to Richard's perspective, I view it as an indication and our expectations with regards to communicating to future directors. I mean, the current directives, I think we'd all agree, do a tremendous job, and the chair. So, this was for a long-term position, really. But does anybody have any other suggestions?
Is there a way where we could express both those different concepts in the statement of expectations, with the caveat that when one of those is significantly less than the other, there is a conversation with the shareholder before declaring a dividend, or just something to, which a company is very connected to council as shareholder. There's a lot of interactions at all sorts of levels, from the chairman through to the people doing the work, and so it's not hard to see we can have conversations with the company depending on the way their financial result is tracking, and that's what we expect them to do from the point of view of the statement of expectation.
I think we all agree. We just have to find a motion then that reflects that. Liz?
I agree. I think we need sort of something in that number 6 to say either this amount, which could be $1 million, or, and I don't know whether 40 to 60% of net profit would still be relevant in there, but something that had both, whichever was greater, a greater amount. So I don't know how you would put that. Do we need a motion to change this, or can that go into the original motion?
We just need clarity. Whether someone moves a motion or it goes in we just need to know exactly what it is you intend, because this is going to be a recommendation to council. When council adopt it, it will go to the company.
And Madam Mayor, we were suggesting a percentage return on equity rather than $1 million. Rather than a number, and a range. But Richard,
Would changing that line with capital investments proposals, because all of those things would be a given. You would expect to demonstrate robust business cases. You'd expect all that to be done. That's not something we're asking them to do, but could it be around capital investment proposals must align with council's, requirement for capital growth, but also,
Yes.
a sustainable dividend, because that's telling them that the company makes no money. You can't just wind it down. But if it's going to have capital growth, there's a balancing act against that on the other tension that they need to understand, because that's something that we can only tell the directors when we employ them. But I'm just wondering if that's a way around it.
A wonderful way around it, Madam Chair, might be for us to split capital investment expectations from dividend policy, so have two separate clauses. We'll do some wordsmithing now, and you might like to return to this matter at a slightly later point in the meeting, and we'll put the wording, a suggested wording up, which you can either like or edit or not like. And we'll do that rather than we're in the middle of kind of the conversation. Is that something that would work?
I think we'd be very grateful for that.
Okay,
Thanks,
let us do that.
Hamish. Thank you. So we'll put that. We'll just move on now. We'll put this aside, and we'll come back to this later in the meeting if the work's done. Otherwise, at a further time. If we go now to the Audit New Zealand letter for engagement, letter for 2026-28, and that's item number 6, and that's on page 14 in Stella. Do what?
Oh, just a question. When you look at the top of the letter, they've put Marlborough District Council, but then in the body they have mentioned Ashburton District Council. So just making sure that everything.
I hope that's not a reflection on their attention to detail when they actually do the audit for 300.
I think we should write a letter to them.
Yes, I agree.
So just bringing that up, I think the body of the letter is all relevant to Ashburton, but Helen, you'll know better than I.
They did send a correction through for one of the documents, but I don't think it was this one, so they might have missed me.
Okay. Do we have a report, someone to speak to this, Helen?
It's me, probably nothing further to add, but happy to take any questions.
Tony?
Thank you. I suppose my question is really around the processes of the audit that we had issues with this year. What have we learned so that next year we will be in a position to have a smoother process between the ADC and Audit New Zealand?
Yep, so we are meeting with Audit New Zealand on Friday, our team here with their team, to review how last year's audit went, so there'll definitely be lots of learnings that we can take out of that. We have also received the report to management, the management letter, that brings up their points, so we have action points in there to follow through and discussion in that regard as well. There have also been changes in team members from both sides, so we actually have 2 new financial accountants on board now, well qualified, that will help resource the annual report audit. And from their team, we've got a new audit senior, different to last year, but she did do part of the audit with us last year, and she was fantastic. So we're actually really looking forward to having her on board as well. So definitely hoping for a way more positive process this time.
Helen, is there any way that we can influence this $312,000 in any aspect at all to reduce the cost or reduce the burden on your department in regards to staff time? Is there anything we can do to?
I think it's always at front of mind from both parties, and I think probably every council throughout New Zealand has those conversations. I know at a higher level there are conversations with the Auditor General around the burden of risk, and can council take on more risk in terms of the audit so that that's not placed on the workload of auditors. I think that's a longer term piece of work. From my team's perspective, we need to get better at what we deliver to them in terms of a product and the way our systems are, and noting through the budget process, we're looking at the asset management system. That will definitely help once that's on board. In terms of providing information to them, we are very much an asset business, so to have accurate asset information will definitely support the audit process. the audit fees are likely probably to come in more like 360 plus, so will be less than that, just more than we have paid previously because of the nature of the way the audits are going at the moment. But I think it's probably largely on my team's back to work smarter through the process and hopefully have some change from up the top as well.
If we look at the full cost of the audit, so that means putting into your staff time, your hours, your overhead, presumably it would be much, you've got 312,000 in budget and you're anticipating 360, presumably be well north of that. That might be, if we're 0.7% of a rate in an environment of a rates capping, if we put that on, well, that's a significant portion of our rates. I mean, that does not seem reasonable to me. Does anybody else have a view? Murray, this is your department. Do you have
Helen's right, and look, I think working with them to get the best fee arrangement you can is intention into that is the best you can do. The reality is we can't change the auditor, but Helen's also right. The better we manage our processes on our end, to your point, the more efficient we'll be, and the less time it'll take for this in future years. And Helen's also right that every organisation around the country is having exactly this conversation, and it is being raised to the various highest level, and it's frustrating, but I think our least path of resistance is to work as efficiently as we possibly can, put some tension on price, and just get on with it.
That's right. There needs to be some tension. I mean, we have had this conversation every year since I've been on council about the cost of the audit and the time involved and the letters back and forth and things. So, I mean, and nothing has changed, essentially. Okay. Do we have a mover for this audit? Any other Hamish?
Oh, yes, Madam Chair, just so the members of this committee are fully aware, and to expand a little bit on Mr Harrington's point, look, Government New Zealand, every council have been talking about unsustainable audit fees for the last decade. So this is not a matter that is not being advocated for. It's not a matter that is invisible to the Auditor General. It's simply that there are obligations on an Auditor General to do the audit, and the focus of the audit is contained in the rules and regulations that the office has. And I think while it's fine for us to continue to express our frustration, and I know Local Government New Zealand has had the Auditor General present at conferences because of the concern. So both Murray and Helen are right. We just need to be as ready as we can to minimise the impact of the financial burden of the audit, and ongoing frustration and advocacy is not going to result in a dramatically different outcome. No. And Murray's also right. We can't change the auditor, so we can't move away from the Office of the Auditor General. No. And there was a point in time in Council's history where there was that opportunity, but I hear as much concern about those councils that are audited by one of the big CA firms. They're no more satisfied with the audit than we are with the Office of the or the Audit Office. It's the rules that they are following and the regulations they're required to express a view on that is creating the issue, as opposed to the Audit Office per se.
Okay, we have Councillor Todd.
I'll move the recommendation.
Thank you, Councillor Todd. Do we have a seconder for that, please? Thank you, Murray. Okay. We're all in favour that goes to Council? Thank you. Okay, so the next item on the agenda is that's the audit engagement letter. The Civic Financial Services Statement of Intent, item number 7. So that's on page 55 of Stella. And we have a recommendation here to move. Do we have any questions on this letter and the background? Is this like, do you have any further comment to make, Helen?
Nothing further to add.
Is this like KiwiSaver for council employees, is it?
One of the services that Civic provides is a superannuation scheme to local government members, but they do provide other services as well.
Okay.
Happy to move.
Thank you, Russell.
I'll second.
Thank you. All in favour? Thank you. So item number 8 is risk pool, and that is on page 69, the risk pool update. Helen, this comes to you again. Any comment or anything in addition to add?
Happy to take any questions.
Thanks, Tony.
I know we have to pay every so often. It's not on a regular basis, but it's always unbudgeted. There's a possibility to put in our budgets and our budgeting for this sort of cost. You don't know what the costs are going to be, I know, but can we do that sort of thing or not?
We could include a budget. It would be a guess. Another way to do it would be to budget an amount per annum to try and level it out and put it across into a reserve if it wasn't drawn on during the year for a time when it is drawn on. It's council's choice whether to provide for that or not. It could be part of a disaster reserve that could potentially build if it wasn't drawn on.
Thank you, Russell.
Thank you. I think from memory, the last one might have been 18,000 or something. They're normally in that similar sort of value, aren't they? It's just one of those ones we're stuck with, and it may go on for a few years yet with the insurance, the way it's been sold and resold and various things. So, yeah, if there's no further questions, I'm happy to move.
Do we have a seconder for that, moving that recommendation? Thank you. Jeanette, thank you. All in favour? Marvellous. Okay, so now we have management of accounts receivable, which is on page 76, item number 9. Helen, anything to add? Oh, you got Erin? Great. Welcome, Erin.
There is some things to add since the writing of this report. So in the other debtors with the amount ranges of more than 90 days, there's from the 5 applications, 1's paid in full, 3 have been sent to DMC, and there's 1 in dispute at this stage, so it's not quite able to go anywhere. From the rental debtors, one of those rental debtors was an invoice that they pay monthly but was invoiced for the year, so we're working with them to try and change that billing because it shows us incorrect results. And the water debtor is they're in discussions with the department about remissions.
Thank you. Any comment, any question from the team? Right, Phil.
Thanks. I was just wondering how do we get debt at EA Network Centre? Like, is that for the pool, gym? I thought it was all a pay before you use situation.
It is pool and gym, but might be something Sarah maybe I've done.
Carolyn?
Sarah?
Through the chair. Yes, it could be for a booking, for example. It might be a school that they've had swimming lessons and we've sent out an invoice and it's over the Christmas period, etc., and it hasn't been paid. They do, sometimes there is a small period that there is overdue accounts, but they do get chased up, and very few go further than, that 60-day time period.
Generally, it'd be pay before you use, wouldn't it? You
Yes,
take a plan.
except for certain organisations, schools is a perfect example.
I mean, the majority of these debtors are current anyway, aren't they, on that table?
Yes, except for things such as the credits that we see coming in. That's usually where a duplicate payment or the department hasn't raised their debtor invoice yet, so they've got no invoice to match the payment against. So they're being worked on with the departments.
Thanks, Erin. Any other, Russell? Yes.
Thank you. So that water billing one of 96,000, that's the one that's down the bottom that you're in active discussions with.
You're already talking about. That would be made up of a few different debtors because we're only
Okay.
talking about a range of 10 to 30,000 for that one debtor.
Okay, so
Water.
there could be multiple small ones in amongst that too.
Absolutely, yes.
Okay, all right. Shouldn't make that assumption then. Cool, thank you.
Councillor Todd?
Thank you. Rental debt, is that mainly Glasgow lease rental or?
It's made up of all different kinds of situational rentals.
If there's no further questions, do we have someone that's going to move the recommendation that the Audit, Risk and Finance Committee receive the report of accounts receivable? Thank you, Richard, and thank you, Tony. All in favour? Thank you. Okay. Now we're moving on to the item number 10, the Bancorp Treasury Report, and that's on page 81 on Stella. Are you up for this as well, Erin?
Yes, I am.
Thank you. Do you want to talk us through it?
So this is to 31 December, quarterly report. Basically, looking at the amount of debt at that date was 150 million.6. We had to raise 12 million in December to ensure that we comply with our liquidity ratio, and we repaid 10 of that in January. At 31 December, we met the ratio, which is required to be not less than 110%. And we're also in the process of progressing through with the establishment of the line of credit. So what will happen with that is we can use that in the liquidity ratio, so we don't have to be looking to bring up debt to meet that requirement. So we're currently working through that with BNZ at the moment.
Thank you. Murray?
Thank you for the summary. We raised 12 million, and this is a technical question. We raised 12 million in December. We paid off 10, was it, in January to ensure compliance with the liquidity ratio. What's the impact if we didn't comply? What's the technical downside? What's the real commercial downside if we didn't do that?
There's no ramifications other than if we needed liquidity to be able to pay for something, we'd just be reporting a breach through to council, which we have done previously. We're putting the line of credit in there so that we're not actually physically drawing down and incurring the cost just to meet the liquidity ratio.
Anybody got any other comments or questions?
Sorry, the cost of borrowing 10 million for 1 month would have been whatever it was. My brain's not working that fast.
Offset with it being invested.
Yes.
Yeah.
Yeah.
That's what I was getting at.
Yeah.
What's the net cost of doing that for what value? That's the question.
So the net cost was basically about $10,000. So we had 26,000 in debt, like interest, and 16 the other way.
That's right.
I think though you have to, being a member of the LGNZ, you've got to actually do your job. You can't sort of say, we'll get away with it, because it's not how it works. You can breach the rules, but we don't breach the rules because that's what we don't do.
If there's no further questions of Erin, we have a recommendation that we receive the report. Does anybody
I'll move
move
that.
that? Thank you, Liz. Do we have a seconder? Thank you, Russell. Okay. How are you getting on, Hamish? We just got the variance report to do.
Just work in progress, ma'am.
Okay, we'll carry on with the, you're happy if we carry on with the variance report? Okay. So now if we move on to the final item, which is the item number 11, the financial variance report, please. And that is on, I've just got to get there, financial report, page 92. Because we've traditionally gone through these page by page, I'll do the same. So just shout if I don't see your light, or and put your light on and we can discuss it. Gordon, do you have anything, or Neil, to add to this, or anything to say before we begin?
No, nothing further.
Okay. So we'll start on page 95, which is the overall summary of the income and expenditure overview. No comment. Page 96, and we're looking at just a summary. '97, the transportation, for the roading, footpaths roading. No comment, no permanent variances there. Drinking water, income and expenditure report. Has everybody read about the group water supplies? No questions? Page 100, which we're talking about there, the wastewater. Any questions or comments? Page 101. Beg pardon?
I see there's a note there on electricity being above, and I think we probably should investigate this more, because it's widely, as a farmer, you've been receiving our power bills lately and you're quite shocked at how much they've gone up. We all knew that line charges have gone up, but I think it's just dawning on everybody in society how much they've gone up. And I'm sure council's the same. We budgeted forward for them, but I don't think we really absorbed the magnitude of how much line charges have gone up. So I think it'll be worth investigating that for the rest of the year. And this may fall through into many other departments as well as to what power is doing, just simply because we didn't, I'm sure no one realised, we did realise, but we haven't
seen it so
we
clearly.
haven't seen it. We're seeing the bills come through and they're quite horrific, effectively.
Yeah, through the chair, yesterday we did receive a letter from EA Networks just informing us that from the 1st of April there will be a significant jump in Lineworks charges. Lines charges, we'll just analyse that next week and just see what impact that'll have on our various services, and we'll be able to present that to you.
Thank you.
Will that flow on to make some change to our annual plan? Because if we know it's coming, we might as well budget for it, because otherwise we'll look embarrassed at the end of the next financial year. So,
If there's information that we know with relative certainty, then yeah, we can look to make a change for the annual plan.
Thanks, Gordon. Hamish?
Yes, further to Gordon's answer there, just so you know, there is an opportunity for us to have a preliminary discussion with EA representatives later this afternoon in relation to information that we did just receive yesterday into that increase, and there's some there's a lot of reasons outside of the control of the lines company as well that's driving that increase, but we're looking for a more complete explanation and understanding of what is driving that, and it would indeed be sensible to adjust our budgets to reflect it, because many of those cost increases are being driven by matters outside of the lines company's control as well.
That's right, we need to, yeah, I agree. We don't need to make it, that'll just happen. We don't need to recommend that, do we? No. Okay. Right. Any other? We'll go to wastewater capital expenditure, Rakaia wastewater. We're all comfortable, we know, understand that. So stormwater on page 102. Any questions? No. 103 stop water. Any comments on that? 104 waste reduction and recycling income and expenditure report. Any comments? Richard?
We think we need to comment on on this one here, because obviously there's a very large unfavourable in the refuse collection and refuse management. I think we've talked about this, and we will, you know, it's a fact that we have to absorb it or manage it over in the next annual plan.
And perhaps from a audit risk and finance perspective, we need to make sure things are in place so there will not be a recurrence of that in terms of the planning function and payment function. But I feel satisfied that we've had that conversation. Does anybody have anything else to add? No? Okie dokie. Page 105, the refuge collection, we can see there the variances. 107 unfavourable variance there. So we go on to recreation facilities, page 108. Any comments? This is basically 6 months through the year, so this is halfway. So we've had it's a good representative sort of overview of the year. Page 109, we've done that one. Page 110. Page 111, economic development. 112, parks and open spaces, page 113. Community governance, page 114. 115, 116, compliance and development. Any comment? Mayor, Liz?
Sorry, I'm just going back to community governance. So we've got the elected members' allowances claimed at 31st of December. So I'm guessing is that from the 1st of July, or is that for the whole calendar year? How does...
Through the chair, I'll answer that one. It's just for that 6 month period.
Oh, yeah.
It's a reporting on the same basis as a variance report.
Yeah. Great, thank you.
You'll see it monthly in the variance report updated that way. So.
Okay, thank you, and thanks for putting that in, actually. Thank you. Right, page 115, community grants funding and the district water management. Page 116, compliance and development. 117, 118, which is a big category of miscellaneous. Any comments there? 119.
Sorry, I'm going back to 117. So the parking and it's 130k favourable. Is that the amount that we keep, or is that does that have the commission that's paid included in that?
Excuse me, through the chair, my understanding is that is the net. That is what the council,
yeah.
Thank you. So we'll go back to 118. Page 119. And the statement of our financial position, page 120. Um, 121, 122, a receivable summary, 123. Okay, and that brings us to the end of the report. Do we have a move?
Just a question, and council investments. We do own some property that is a true investment property that just falls under that big property umbrella. But we have, some commercial property that we lease out. I would almost like to see them removed from under that big umbrella so we can see the return on investment we get for those properties, what it's worth. And, there's some of them I know they have strategic purposes and they're not true investment properties, but there is a list of those ones that are commercially tenanted, and I think they should almost come under council investments rather than property. I don't know, that may be something for further on, but it's just a thought that I've had.
They are different to these types of investments, and we include the financial information in the financials for that activity. I think what you would probably like to see is the work that will come through the property strategy in terms of the returns against those, because those returns will be set on the longer term basis, so you wouldn't expect them to fluctuate to be reporting this frequently. But definitely through the asset management work that we're doing in the property strategy, you will get that information.
Cool, because sometimes at the moment under that commercial property brand, they have property that are not really a commercial investment. It's just they're charged with looking after it. But if we can pull out those ones that are true commercial investments, we get to see what our return on that investment is. Yeah.
Thank you. Okay, do we have a mover that we receive this report? Murray, did you? No. Yep, thank you. Do I have a second? Tony, thank you. Okay, now that takes us back to item number statement of intent, which was item number 5 on page 5. Do you want us to leave that, Hamish? Or?
No, the statement of expectations, though, rather than
Statement of expectation, yeah.
I have just circulated an email to members of the committee and to one or two in the executive around a proposed clause 6 and a new clause 7, which is separating out the capital investment expectations from the dividend policy. So if you have got your ability to open that email, I can read it if you would like, but essentially it describes 50 to 60% of net profit rather than 40 to 60, because we note in their current SOI they're already talking about 50, a minimum of 50, or 4% of equity to the previous recommendation or resolution. But then adding, in the event that directors, so this is the ACL directors, do not believe that the expectation is in the best interests of ACL in any particular year, the ACL chairman shall enter discussions with the ADC mayor and CEO with the expectation agreement can be reached in relation to the specific dividend paid. So we're really just trying to say there's two ways you can do it. We want the higher of either of those calculations, but if you have significant reservations as into your obligations to the best interests of the company, then the chairman's obliged to come and talk to us. So that's the intent of it.
I think that reads very well, and I think it's very clear, and I'm, for one, I'm very comfortable with it. Do we have some discussion around this? Murray?
You're going to think I'm...
Helen, you go first, Murray. Helen, go first. You've all turned your lights off.
I was just going to suggest that in terms of the 4% of equity, it would be worthwhile having 4% of closing equity for clarity.
Sure.
I think I haven't got the wording in front of me. That's all right.
I've just sent it to you.
Thank you very much. You can think I'm like a dog with a bone on this equity piece. This is a contracting company which doesn't have a significant balance sheet. If a contracting company leases all its equipment versus owns it, you get a different outcome to that calculation. So that's why I'm kind of saying, I don't necessarily believe, in numerous of these conversations specific to a contracting company versus an asset company or a farm or whatever else, that's necessarily the most useful thing to have in there. But it's a committee decision.
So you understand our intention, and in the intent of it, do you have an alternative proposal?
I think what's in there is absolutely fine without that. I'm just saying the 4% of equity, depending how they make other decisions, you could get perverse sorts of outcomes, in my view, in a contracting company. Might be very appropriate for another sort of company. But this is a contracting company, which doesn't typically have a big balance sheet. But, for example, they might lease all their vehicles versus owning them, and that'll give you a different return on 4%.
I mean, they don't, but it could be.
They could.
Liz?
So this statement of expectation will go to the ACL board, and then they will come back with feedback. How often is it reviewed? Is it an annual letter?
Yeah.
Or is it For the
Annual.
triennial?
No,
Annual.
it's annual.
Annual.
Because they're obliged to produce a statement of intent annually. so-
Annually, so this would run alongside that, okay.
The order of work, Madam Chair, is that they would get our statement of expectations, consider it, and then make whatever their position on that expectations into the statement of intent. So that's the order.
What's the first?
I think the point Mr Harrington made is actually a really good point, but I wonder if it's largely covered by the greater of, because if indeed they leased everything and had much lower equity, then 4% of that number may not be, may fade away compared to the profitability. So there's a little bit of check and balance.
Yeah, I'm just saying, just be
Yeah, that's a
aware.
good point. Yeah, I
That's
take the point.
It's good advice, thank you, Murray. Richard?
Yep, I like this here, and I do take into account what you're saying, Murray. I think that if they were to, I wouldn't have said they would reduce their equity, they would dilute their equity by having, leasing more equipment, making the company bigger, therefore the return on equity you'd hope would go up, because that's the only reason you would lease gear, because you're trying to stretch your equity further and to make bigger profitability. So instead of thinking the smaller company, this allows them to make a bigger company. But the investment that council, it's probably, I'm trying to signal to them that the investment that the council has in dollar terms needs some return, because otherwise council will be forced, just through the nature of things, to redistribute our equity, our capital, sorry.
Do we have any other questions or views on this new recommendation? Or this insert into the statement of expectation? Is anybody happy to move that? Russell, thank you.
I'm happy that we move, that the letter of expectation goes to council, changing number 6 to this new wording, including number 7.
Thank you. Do we have a seconder for that? Thank you, Richard. All those in favour? Aye. Any against? No. Thank you very much, and thank you, Hamish, and your team for that. That was great.
Sorry, Madam Chair, do we also need to move in the original recommendation that we grant the extension to the 9th of March?
I think we
so
moved that as part, but we can make a separate movement to take out item number 6 and reinsert and move the whole thing, because it's all one motion.
So was that one motion? Was that your intention?
Yes. Yeah. With the acceptance of the seconder, I'm happy to move that into the original motion as well.
Are you okay with that, Richard? I assumed. Okay, thank you very much, everybody. I think that ends the open part of this meeting.
I'll move we go into
Thank
committee.
you. Do we have a seconder for going into committee? Thanks, Jeanette. Okay, thank you.